Why slow down now if you're BYD? This comes at a really strange time because in May 2025, it was actually the biggest month in terms of sales for BYD. They delivered 382,476 vehicles in May alone. So BYD has just slowed down production at several of its Chinese factories. Some shifts were cut, expansion plans, they were delayed, and that raised eyebrows because BYD is supposed to be leading the EV race. So what is actually going on? What do we know? So what's happened with BYD? Let's start with the facts. BYD's sales are up 39% through the first 5 months of this year compared to last year. So 1.76 million electric vehicles sold worldwide. That could mean that this year they're set to sell 4.22 million vehicles at that rate, maybe more in reality with the launch of the Dolphin Surf and the Seagull in right-hand markets. According to multiple reports from Reuters, Investors.com, Car News China, BYD has made significant production adjustments. Night shifts have been cancelled. Production has reportedly been cut by at least 1/3 at 4 factories. Plans to expand capacity as well have been delayed. So that's not a small change. These aren't one-off adjustments. These are quite a big deal. So these are coordinated across BYD's entire operations. Here's where the numbers start to paint the picture though. So even though sales are quite strong at the minute, production growth is stalling. And in May, BYD's production was actually up only 0.2% year on year. The slowest growth they've reported since February 2024, actually last year, if my memory serves me right. A recent dealer survey showed that BYD stores an average of 3.21 months of unsold inventory. That's the highest of any brand in China right now. So for context, a healthy level is usually something like 1 or 1.5 months worth of inventory. So 3.21 means that there's a major oversupply issue. So they've obviously just been building lots of cars, putting them in the car parks where they're selling the cars, and nobody's, they're not buying them at a quick enough rate. So even though BYD has cut prices on 22 different models, some discounts have been as high as 34%. It's clearly not enough to clear inventory fast enough. So if you're running a company and your sales are good, but your stock is backing up, what do? You, of course, you pause, you ease off the throttle a bit. So that's what I think this production cut looks like. BYD sold over 3 million electric vehicles in 2023. Within 24 months, they're now on track for 4.2 million this year in 2025, if the current pace holds. Compare that with Tesla, 1.84 million cars globally last year, and it's now pacing toward 2.1 or 2.2 maybe this year. But that's also the problem. So 90% of BYD's sales are actually still domestic. They haven't cracked the West yet in the way that Tesla has, and as the Chinese market becomes more saturated, international growth becomes a necessity. It's a lifeline. So it's not just a bonus and extra money, it's a necessity. This isn't just a BYD story, I think it's a China story as well. If a home market can't absorb more EVs, then every Chinese automaker, not just BYD, will be forced to expand really fast or shrink. So this production cut might just be the first ripple of a few ripples, I think. So BYD have officially denied this, actually. They're cutting production costs. They've denied that. They told media outlets saying they remain stable, sales are continuing to grow, and that is technically true. Sales are still growing, but 0.2% year-on-year production growth tells a more subtle story. They're shifting from a kind of like early rush, go, a mad rush to try and beat everybody else, pushing everything really, really hard sort of phase to a sort of more cautious phase. So here's what I think is really going on. BYD ramped up massively at the start of the year to win the price war in China. Obviously, that's not just a headline, that genuinely did happen. And they did win. They outsold Tesla, they crushed local rivals, they forced brands like Toyota and Volkswagen onto the back foot. But that kind of aggressive push builds up loads of inventory really, really fast, rather than keep flooding the market and risk their own dealers choking on unsold cars. They are now doing something smart. They're balancing supply with demand. They're not failing, they're just adjusting. So this isn't a collapse, it's just a throttle back, I think. Let's not forget as well, China's EV market is absolutely brutal right now, has been for a while. And there are over 100 car brands fighting for space, profit margins super thin, and prices are in a race to the bottom, basically. So even Tesla has struggled to keep up with China's pace. Their Model 3 sales in China dropped 30% in the first half of this year. So BYD is adjusting production. It's not just a weakness, it's a smart move, I think, in a saturated, oversupplied market. It's also worth noting BYD is expanding outside of China faster than ever, faster than any company. They're entering Latin America, Southeast Asia. They've launched in the UK, Germany, Australia. So if anything, they're relocating resources for global growth, not pulling back from electric vehicles, I don't think. If you appreciate this kind of honest analysis, feel free to support the channel. Links to Patreon or YouTube memberships are below. It also helps me to keep these videos independent. And I also turn off in-video adverts as well, always, because nobody wants to see them. I'm Ben Alexander. Thank you for tuning in for today's video. Feel free to subscribe as well if you like the video. Any questions, put in the comments. So is the BYD bubble popping, so to speak? I don't think it is. I really just don't think it is. This isn't a collapse, it's just a course correction. They've oversupplied the market, now they're trimming back, and I think that is just simple, smart business. And they're still selling more electric vehicles than any other company on earth. So the real question isn't whether BYD is in trouble, it's whether the Chinese EV market as a whole is becoming unsustainable. Because if even BYD is cutting back, you can bet smaller players are under massive pressure in China. So what do you think? Is BYD simply adjusting, or is this the first crack in the armour? And with all of these discounts flying around, are you waiting for a cheap EV, like the Dolphin prices to lower a little bit, or the Seagull or Dolphin Surf? Have you already made the switch? One of the things that is apparent, and I've said this before, I always do these 4K close-up videos where I go to dealerships and I go to different cars and I go this far from the panels of cars and I drive them and stuff, and I do 4K close-up review videos, and they're a little bit anal, they're a bit long sometimes. I try to cut them up, but they're brilliant. They really give us all a good sense of what exactly these cars are made of, and we can see clearly that they're becoming basically fantastic. And I think that's what some people are realizing. I've spoken to some people recently in Australia that I know who were Toyota fans, and they were always definitely like a Toyota Hilux sort of person, somebody who buys a Corolla, Camry, Hilux, somebody who's just Toyota because they're so good. And they've actually seen BYDs, and actually it's quite obvious in 2025 BYDs are up there now with the very best that you can really buy. They're obviously proving themselves, like in Brazil, there's a couple of people now driving 250,000 kilometers on the same wheel bearings, the same motors, the same batteries, obviously, basically no degradation in the battery. So yeah, astonishing really. But what do you think of that? Please let me know in the comments. I read every comment and I reply to the earliest ones. Thank you very much for watching, and I'll see you in the next video.